jump on, seeing as we're relatively late, as per usual. Late is my middle name. Okay, we'll see who's there. There's Ladder Boys. Hello, buddy boy. How's it going? Let me
Hello,
see.
guys.
Yeah, scroll thing looks quite nice, mate. Look at this. Every day that goes
Hey, it
by.
looks cool.
Yeah, turning more and more like a streamer every day. Look at that. Yeah, so we're streaming something a little bit different, guys. Satan, how's it going? We're going to do a little bit of treasuries. Um, we've got about an hour and a half left here, so we're going to run through what exactly is happening.
Shall we do an announcement on the server that we are online?
Yeah, that would be a good idea, mate. If you could do that, it would be awesome.
Sure.
But yeah, how did you guys do for trading today? What all was happening with everyone? We'll run through the lowdown that's happened in treasuries today. Ladder boys and Satan, did you guys trade? Sesh? A little bit of CPI action today. Come out in line with everything. So clearly, in light of what's happened in Monday, Tuesday, the market was already pricing in this number. So go figures, that these boys, these large firms know within a probably a tight standard deviation what these numbers are going to be. Because otherwise, why would you be selling? You know, the numbers all come in line. The market, pretty much goes up ever so slightly, but then just pulls in. And now we are sitting pretty much at the lows, apart from the two and fives, but relatively weak day. So definitely, the market has been saying that the Fed is probably not going to be cutting as much as they should be.
Mr. Orderflow, your mic is super low.
It's really low. Okay.
Yes.
Really? It's as high as it can go. Can anyone else hear me okay? That's a bit strange. I don't think I can turn it up any more, mates.
That's weird because I had to increase your volume on Discord as well, but
Oh, you did?
normally it was yeah,
Oh, really?
really
Wow.
really low.
Hmm. That's strange.
Do you
Is it
hear my voice normally, guys?
any better? Any better? No.
I'm on a high volume, guys.
Yeah, you're definitely on a higher volume. Yeah, so I'm just looking at the setup here, and it's as high as it can go, but it's almost like there's not as much volume that's coming through the mic, which is a bit strange. I need to have a look at it. I think you are pretty high volume, mate. To be honest, let me see if that makes a
Yeah,
difference. Is
yeah,
that any bit?
guys, like,
Is that any
guys
better?
say keep saying that it's still low.
Oh wow, so it's definitely low then. Okay, that's strange. Microphone.
For me on Discord on our call, you are at 200% user volume and you're still low.
Uh, maybe it's
So
YouTube.
guys, while my Mr. Orderflow tries to fix his volume issues, well, overall it's been a one way up on the yes today, while on treasuries, both U.S. treasuries and European bonds, it's been a wide range day. Lot of opportunities. Hmm. Yeah, so how how was your days, guys, overall?
Let me see if that's any better. Is that any better at all? No, the exact same.
If nothing, they're suggesting to unplug and plug back in.
I've just done that.
Mm.
Maybe it's
So
YouTube.
probably
Sounds low to me, and I have my sound up to 80 to here. Nope. Oh wow. Mm, I think it has to be something to do with OBS because it's like it's not picking it up. To be honest,
OBS turned the slider up.
it's completely at the top.
Oh,
Yeah.
so it must be something that like the guy said that you had too much green and
Yeah, exactly. I mean, in order for this to sound normal, I would literally need to shout. But I can see that the noise is not it's not going through the same, to be honest. But we'll see. Hopefully, you guys can hear, because otherwise I'm going to be tripping that you can't hear me. But you can hear me though, right? It's not as bad as it's. You can still at least hear, right? Maybe just a little bit lower. So yeah, we'll continue on for what's happening. So rhetoric still that the Fed is probably not going to cut as aggressively, yet essentially traders have increased the bets that they will be cutting. They're definitely looking to cut in the December meeting, um, but we'll see if they follow through, especially with Trump coming in January. It's definitely going to make a bit of a stir. Right, why you trade slow market when BTC SPY make few percent a day? That is because I don't understand different slow and fast markets. What's the benefit? The benefit is consistency, mate. Um, that after say lunchtime in treasuries, the range is already set for the day, so you can scalp around, and consistently make ticks without anything crazy happening. You're trading the debt markets, the most liquid markets in the world. On a busy day, the 10-year will have like maybe three to four times the volume, 3 to 4 times the volume of ES, for example.
yeah, for me it's the same. It's about consistency. I'm a long time, yes, I was a long time, yes, only trader, but then I just and I was like, no, I'm not gonna trade bonds because they're slow. But then I seen this beauty of trading a calm, a nice, a honest market, because the yes is dishonest. I mean, today you had a nice trend day. You had a BTC rallying 50%. You can name whatever crypto you want, and they rally at between 50 to 1,000%. But it was once in 3 years. You get me? So, um, and that relates to crypto, of course. But on ES, one could trade ES. It gives you a nice pump of energy, whatever you call it, some excitement because I have a lot of strategies that work on the ES for myself, setups that are not candlestick setups, but just order flow behavior. But all of them require fast reaction and no hesitation. And so what I discovered that treasuries, for example, or European bonds, or even the FESX, the Eurostox futures, are much more consistent, are honest. I wanna call it because somebody else called them honest market, and it perfectly represents what they are, honest market, because the order flow is straightforward. What is the problem on ES overall? The problem on ES, especially in the last years, is that contrary that what it was for 30, 40 years, where the futures lead the underlying, so all the underlying was looking at what the futures was doing. It's now it's shifted. It's all about options. It's options that go and the hedging of on options by the big players, the market makers, the dealers, whatever you want to call them, or they don't have to be market makers because, of course, options are traded directionally a lot. They provide more leverage, especially zero DTE options, and the order flow isn't clean. It isn't. Where usually let's take an example of a classic ES setup. So you patiently wait for a buy sweep to the upside, and you enter around the middle or 3 quarters down from where it originated, and usually you didn't have virtually 3, 4, 5 ticks of drawdown at max if your entry was too aggressive. The classic northern method entry. Um, Now, if you don't consider, I mean, that is for that specific setup, that specific advantage on an event that happens on the yes, now you have to factor in a lot of other stuff because maybe it sweeps up first time, then it gets back, you enter, and it goes against you a whole 2 points, then it gets back around your entry, it moves a little bit to the upside. It gets back a third time, a fourth time, a fifth time, and eventually it goes up 4 points. If you are long, that's the problem. While and that is 100 as a person that has been looking at the ES for a long time. It must be something that is related to options, and then there are just lower market are more consistent. Like they don't do that. When they pick a direction, is that direction. That's the fact about trading as low market, but against a faster market. And there are fast markets that are honest, like even the Boxer. It doesn't have much on the that it's the 30 years European bond. Sorry, the German bond. It has 40 to 50 on the best bid offer, but it doesn't sweep so much. Why you only scalp? Why don't hold for longer? Because futures markets aren't made for holding, and we trade futures because you have overnight margin and maintenance margin.
Just
Um,
double checking if this is any better, mate, or worse. Let me try this way, see if this is any better. If not, I'm going to need to check it after, and you guys are going to have to bear with me. That's certainly not getting any better, is it?
It didn't, no.
Okay.
Why you only Skype? You have to become a specialist in trading. You cannot be a generalist. It's specializing in one thing and doing it repeatedly for 30 years. So if you are good at taking the flow for the next 3-4 ticks, then the thing is increase size and earn on that. If you are good at reading the market, and the fact is that we don't want to speculate too much. We are data baked traders. The more data we have that backs our trade, the better. We don't trade off opium. We don't anticipate so much. You just get on the market every day. It's your job. You get on the market. You take what it gives. That's the fact. It's that you get super specialized in one thing. If you are good at anticipating large moves on the market, fantastic, good. You can have a 20% win rate and be profitable over 10 years, 20. I cannot. I can't. I'm not good at, and I'm not an investor. I'm a day trader. But yeah, it depends. It depends. I have friends that are holding Bitcoin since 15K. I mean, and they quadrupled or more their portfolios. Why I didn't? But I consistently made money every day, every month, every day. No, because it's impossible to win every day. But you can be profitable over a quarter. That's what counts.
I think that could be us now, man.
Specialized.
I think we could be sorted with this audio now. Check, check. Let's see. If this is not it, then I retire. I think that's it now. Does it sound better to you, mate?
For me, no. Is it the same as
Oh, it's the
before?
same.
Guys? Yeah. Guys, you?
Oh, it's up nearly full now on the mic part, to be honest. Much better, I think.
I still have you on 200% on Discord on our call. And the volume...
Yes, I think it's better. Much better though, right? I think because it's showing on my screen on OBS that now when I'm speaking it's up to like the yellow and red part. Before it was not. Now Jagger's down, that's because... Okay. You guys really want your ears blasted this evening, eh? If I turn... I'll turn Jagger up so we're both at the same now. Okay.
And now I'm down. Okay.
Yeah, so now we're both in line with it.
No, so it's your turn to... You guys switched volumes.
Right, that should be it now. We should both be in line. Jagger, you give us a little check 1 2 on the mic, please.
Check 1 2 1 2.
I think that should be us now, to be honest. If it's not, I'm sorry, you're gonna have to deal with it because I don't really know what I'm doing, to be honest. Bingo, there we go, happy days, you know. There's a DJ yet in me. Right, we are dumping here. What's going on? Everything is hitting the lows here. Let me rejig. Okay, so
yeah, and how was the 10-year auction? It was a beat or a miss?
I actually didn't even check, to be honest. That was done earlier. But right now we are dumping, which is literally the market is saying, which we're saying earlier that the big boys are effectively saying to Powell right now that we don't think you're correct in your cutting right now. What is interesting though is the 2-year is quite a ways away from the lows yet. Everything else is cracking. So we'll see if the 30-year is going to break threes here. because we've got an hour and 10 minutes left till close on bonds. So this is getting to a really juicy level potentially for us to fade. But we want to see the 10-year. So we've seen 3,600 contracts hit into the bid here. So someone is defending. We want to see some back ticking happening. So clear iceberg at this level here. Let's see if the 10-year is normally the one that's going to hold up the market. Okay, so we want to see this now clear. So they've cleared that 4.5. We want to see them now lift up and clear this. But this offer is still staying strong. And in order for this to pull back,
the bid there.
yeah, exactly. And in order for this to basically tick back, you need to see one of these markets, particularly the 5 and the 10, basically lift this price. It looks like they're going to do it, but there's some clear signs. So if lifted, there'll probably be some two-way, but you want to see this bid now firm up. There we go. There's the firm up. Offer pulled. So you want to see them now protect this level. There we go. So now is your chance where you can basically go bid on the 30s, right? And then the objective is that we're not going to hopefully return back to these levels, and you've got a good risk to reward, potentially back to the first pivot or just below 12s. Is the sort of premise for this here. But the 10-year is the key for this specific trade. Now, are we likely going to continually smash here at an hour and 10 before close? Probably not. You know, we're more than likely going to go up and balance our way out. The fact that we are ticking up across the board here. But one of the key conditions for this, in my eyes, is the fact that the whole curve is not, the 2-year is not moved, right? The 5, 10, ultras, and the 30-year was ticking down. The 10-year is the dudes that will basically control the lift up, is the plan. And you were at the extended pivot for the session. So there's a couple of ticks on board for that. I've just rambled there, but what do you guys think of that, typically? Is that how you would look at it yourself, Jagger?
UB kind of anticipated, like it moved up 5 ticks already. I am long 05 on the ZB, and I got out for a tick here at 06, and I'm holding a lot, one lot, going into, I don't know. I'd probably just trail up the stop. Yeah, because they can extend that much at this time, no? The yields broke to the upside. Wow, didn't notice that. Yeah, retreating, but the yields broke to the upside.
Yeah, we should potentially pull in. We'll see. What was the forecast bid to cover ratio, JJ? Results total 39 billion, 4.25%, bid to cover ratio 2.7. They actually yield awarded 2.35%. So it depends what the forecast bid to cover versus the actual is. Maybe a little bit less demand for them for the yields, so it also helps to push down. Because they've commanded a little bit less than the 4.25%. It's been 4.235, so not a lot of demand for it, which potentially helps the initial sell-off.
Oh man, the yields continue to go to hold at the highs. Incredible! In the last hour of the open market, yields continue going up. Weird. There's 2,000 contracts at 230 on the ZN. It needs to break that level, get to 2.240 and hold. Yeah.
There's been negative.
Not much to say on the ES, to be honest.
Negative 10k in the last 54 minutes on the 10-year, nearly 2k on the 30-year, relatively flat on UB. 2,000 on the ultras. Let's see the 2-year. Yeah, there's just aggressive selling into the curve here. So I would be slightly concerned here if the 2-year breaks previous day low here. Then we may be in for more downside, but we'll see. The 30-year needs to basically print into threes and break below. Yeah.
I'm out of my long for a scratch.
I still think we're going to go up
I
here,
don't care.
to be honest.
It looks like it needs to accumulate some more volume, but was the previous reversal volume? The 10-year must show some more interest here, some more volume traded, not that much. Let's see. Yes, looks like he's taking a break with those minus 4K delta in the past 40 minutes or so. It's like a pullback on the S here. Might be deeper.
Also, we've got the yen and the Swiss franc at the left. They typically hold, month to month, something like a 92 to 96% positive correlation to the treasuries. So just because of safe havens, so it can give you an idea as well for the correlations. So they typically move in tandem with each other as well. And then of course you've got your yields that are inverse, which are fantastic.
Yields, yeah, fantastic, because they give you an advantage of at least 3 seconds most of the times.
Yeah, 100%. Okay, quite a key level. We're back to here. We've seen 5,042, 5,400. We'll just call it 5,500 now. Hit into the bids here. So clearly someone is absorbing at 20s here, 22s, even.
23 was a nice try on the 10, but on the 2s at 107 we have some prominent negative delta on the 5s down here, but they might break.
Yeah, let's see if they're going to take this or not. See, they just go down and print a couple of hundred and then reclaim. Let's see if they're going to thicken up this bid.
Plus plus 52 basis points on the 10-year yields is...
it's a lot, yeah.
It's a lot. It's quite significant.
Yeah. I definitely
Marenda
think...
is asking, Mr. OrderFlow, could you create a tutorial for Sierra chart specifically focused on bonds? There's not much on YouTube that covers the modern bond market in detail.
Yes, mate, I could. Yeah, I mean, to create this chart book, to have everything set up like this has taken me years to get to, tons of trial and error and, different things. And I'm aware that it is pretty full on. You're looking at 6 markets here, and you've got the safe havens at the left, for correlations. So, but yeah, I can do something for you, mate. You need to let me know what you're specifically looking at. We're still holding this level here. Wow. There's Piggy Boy. Pig's back. Full on gazing into the matrix here. What are the pretty lines and candles that all the ladies love? Well, to be honest, this is just the true order flow, man. This is typically what I look at hours and hours a day. This is the deck. This is it. Maybe twice a day I'll check the market profile to see what's happening, but this is how you trade treasuries, man. This is it. Because every single price, there is hundreds or thousands of contracts. UP is getting smashed, isn't it here?
Yeah, it is. It is.
And you see, they're still holding the offer. The 10-year is always the one that needs to control it. You see them, they're trying to smash it down some more by by
There
spoofing
is so
this.
much absorption at 22 to 23 on the 10 year. It's
Exactly.
crazy. It's
It's
gonna
crazy.
smash the lows.
Yeah, they are just drilling
Oh
it.
man.
Again, the 10 year is the one that's going to turn the market on a dime here. Still, the 2 years not moved. I would be a lot more concerned right now if the 2 year was at the lows. If this 10 year can hold round about these levels, then we should be good. But I've actually seen this the last couple of times there's been an auction come out. There is just continual selling, but as we said, the continual theme here is big boys are saying the Fed is wrong. Because if the Fed are about to cut aggressively, there shouldn't be aggressive selling in bonds. So pretty much all this strong data that's coming out, the big guys are aggressively selling into the curve.
Wow.
This is crazy, the amount of absorption in this
This
tens,
is
isn't it?
wow. The bond is dumping. It normally doesn't move at this time anymore. After the London close, the bond is just and the bucks are man down a lot.
I'm so
I be
I'm
right back. I be right back, guys.
I'm so glad that I finished early, and this is the type of session where you're just never gonna be catching this at this time. So what we'll typically find here is once the 10 year catches a bid, we're gonna basically pull back in here, and you'll notice it will just flip. Nice one, Cole. Nico, buddy boy, what's happening, dude? If you guys can hit the like and the subscribe button and do all that fancy stuff for me, please. Share it with your friends, share it with your family, share it with your dog. Right, here's the time now. This is what happens all the time on the 10 year. It looks aggressively like it's hitting the bids. The fact we said that the 2 year had not moved was kind of your microscope into the fact that we could be going higher. So if we take out this level and we firmly go bids, then we could be on. Exactly. And notice out everything else. See when the market is shitting itself the way it's been doing like right now, the 10 year is the puppy that will control it all. The 10 year is whenever you see, the fives and the 30 year has maybe got some icebergs on it that's been held. If the 10 year cracks a specific level, the 30 and the 5 will go in that direction. So if we can if we can reclaim 22 and a halves here on the 10 year, then we should potentially see the market continue up. Look at the amount of buying that's coming in now. If this firms up, now they need to clear this in the fives. See, someone is still trying to hold on the fives. They've just pulled their order. So this is very typical at this time. If you do get a breakout direction, there's some fantastic risk to rewards. Back up into this level. So a nice probe below, and it just so happens that we've got to the pivots as well. Oh, is your doggo more a crypto guy? Nice. I think we pull back a little bit and maybe start bidding. Yeah, Aaron, it's an interesting candlestick chart. And I should probably explain, just for you guys that, so you know what we're looking at. So this is the 2 year notes. This is the 5 year. Let me get the pen. Let me do that. Pen. So well, since we've whipped out the trusty pen, it's about time. About time we get it out for everyone. Yeah, I use pivots on the DOMs as well. Just add them on. So let's ping this over here. So we're going to draw this just so you guys can see. Let's make it. Yes. So this is the 2 year. This is the 5-year. This is the 10-year ultra. So we'll put 10 and then a U. This is again the 10-year, which is the benchmark now for mortgages. This is the 30-year. And this is the ultra bond. So we'll use the 30 ultra. Now, for anyone that doesn't know this, we're going to tell you what the difference is. Okay, this is the opposite, the note for the 2-year yield. This is the note for the 5-year yield, and this, when you get to these ones, a little bit wonky. So the 10-year note specifically goes from about 6.5 to 9, whereas the ultra 10s specifically caters to the longer part of that extreme. So it goes from 9.5 to 10 years. Okay. So if you wanted to take an extreme part of the belly of the curve, then you would use this specific product. The 30 year is anything over 15 years maturity, and then the ultra is specifically anything over 25 years part of the curve. So this is why the yields here, we've got the 20-year bond, because that specifically caters to this part more, and then the ultra bond is the 30-year that specifically goes for the long end of the curve. So hopefully that makes sense. That's why these are the respective yields that you're seeing. And they are complete inverse. So these little boxes you're seeing, okay, are the inverse of the actual note. Okay, so for example, we are really negative on the sesh right now for the 10-year, whereas the yield is plus 54 basis points, which is a huge day, by the way. Huge day.
74 basis points on the 30-year on the ultra.
Wow.
Crazy.
That's crazy, isn't it? That's a huge move in treasuries. Huge move. So hopefully that made sense in all my mad potato drawings here. I was just explaining, the difference in the maturities for the notes and bonds. Okay. So everyone knows
Alexandros Margaritis asks, you use pivots. I do.
Yes.
I personally do.
Yeah, I think they're good levels because the bonds don't move that much. They typically are quite respected. Wow, I nearly pressed that there. Jeez, oh.
Full size long here. 50 minutes into the market, yields raging up and get long.
So we're down at this level again. We'll see. I would be relatively concerned if the 30-year broke here. I would be pretty concerned. And if we break through this with some size at this level, then I would be concerned. But I still think there's a good pullback in here, and it'll probably do it within the next hour. Sadly, treasuries, if you're looking to long here in order to get a good move, say back up to this pivot, right? You're going to be holding this for 45 minutes at this time of the day. Just so you guys are aware, the market's not ES. You don't get into this trade and then it's done in 2 minutes. This is a good holder, probably till at least the close, I would say.
Classic pivots, by the way. Just normal pivots with the normal calculation. The most classic that are that can be observed. Like you could see today on this VB, the upside move after the CPI is basically reversed on the pivot point, while the low pre-CPI was on the first support line, and yeah, they're quite respected. I also copied that from Rob, and I'm impressed. I'm impressed, like how relatively super simple, straightforward the stuff works on the treasuries and the EU bonds work. Really, really nice. Really nice.
This,
Because overall, we want to make it simple, no?
yeah, exactly. This is the third attempt now for this level, back up to 22s. If we do take this out, then we should be on. Everything's looking, it's just going bid at the moment. There we go. There it is, 34 lifted, which is always nice. You want to see this ideally not have continual two-way, like they tick back into 22s here, and then they just pull this bid and go offered. Oh, actually, I can draw on this without it. Okay, that's interesting. I don't want to chance my luck though. Pressing on the buyer sell side with it, I'm really testing fate there. So yeah,
Okay.
the fact that they're not, you want to see them lift some actual size in here. Otherwise, they clear this and go offered again. You know. Okay, nice. Nice. Let's see if they can push some through here. Otherwise, we're going to dilly-dally down here for a little bit longer. Always nice to absorbing 1300s.
25 offered. Let's see how much is taken. Backticking with a few lots, just one. Backtick on 22. The bid is pulling a bit.
Yeah, nice to see though that you know that they're not just doing the classic hit 186 up and then 300 ticks back in and then clears. So the fact they've done that, you want to see that exactly. So they instantly lift what was on the offer, and now we have this two-way carry on at this price. So the value right now is definitely 22s. Definitely.
For baits, one wants to really wants to try, but this could be a absorption again, like we have on the previous
Previous couple
10
of
minutes.
sessions,
We have
they did the same. They did the same
three and a
yesterday,
half
actually.
thousand. What?
They did the same towards the close yesterday. They did this exact movement where it broke down a little bit. We saw tons of absorption on the bid, and then it basically pulled in. Did that an hour and a half or so, roughly, core close on the 10-year, I think.
Yes, Aaron, you could trade treasuries, European bonds, FESX on Blue Sky without any stupid rules. You can do as you please, take a tick with full size or whatever you want to do. And if you want to subscribe, get on our Discord. There is a Prop from Deals channel, and use our link. It helps the community.
Yeah, so here we go. This is still staying strong. We need to see someone actually grab this by the balls and lift into the offer here. They've not really challenged. They've hit 186 up here, then hit 10. We want to see if they're actually going to... There we go. There we go. So they're lifting now, which is good. We want to see this clear.
10 and 30. I'm buying pressure. I want to see 5 and 2s as well, but
see
they're
this,
kind of lagging.
see if this can tick down to like 50, 46 here. That would be nice. 46, 45. And we'll probably see this break. It's awfully slow. I thought we'd do a different stream today, guys, on treasuries rather than the standard ES market. Is typically don't really trade ES much these days. This is where we're spending 5-6 hours a day.
Makes much more sense to show you a market that we trade than.
Okay, so the 30-year is at least ticking up to this pivot. So 30-year, the obvious target is going to be here, back up to 12s in this pivot. So we'll see. This needs to break here. If we can break here with some size. And remember, we said we want to see the yields tick down to 46s and 45s. And again, as we were saying, the 2-year has literally not moved. There we go. There's the tick up. Some size, stay strong. continually lift is what we want to see. And the last 30 minutes, this has been in a 3-tick range. The 2-year. Look at the amount of size that's on this offer here. Jesus.
DB is leading. The 10-year is supporting. The 5 is selling.
Oh, it's not great, is it? 4,600 into the offer, bid pooling. Not ideal.
No, absolutely not.
They're just saying in the last 15 minutes there has been plus 6k delta here.
Yeah. This has to close above 23. Close because they have a. Yeah, it has to accept above 23, and if it goes.
Yeah, if it goes where.
With 23, we're gonna get at least a 340 upside move first. On the 10.
It could be one of these days though where we just chop around down here, but I definitely think we're gonna have a run up to the pivot or the value area low, and then maybe trade out here, but we'll see. Especially the fact there's 4,612 contracts here lifted into the offer. I don't think that's going to be revisited. There's Obsidian. How's it going, dude? Exactly. A little bit of yield action. So notice how we said this was at 48s, and we wanted it to go down to 45 to help support the breaking of this level. Instead, now the yields are ticking up, putting pressure down here, and the bid is just cancelling off. Not ideal. The absolute opposite you want to see for this breaking this level. So this 10-year really needs to try and support here. It's screaming for a bid, but there's just no bid there right now. Complete cancelling off.
That ES just made a pullback and it's back up quite a bit from 94, 98. The ES.
There's Obsidian. Nice of you to join the Discord, buddy. Make sure if you're to check out all the different channels. What do you trade? If you trade treasuries, there's treasuries in there. There's active ES traders in there. It's a good community, to be honest, that we've taken a while to build, which is all thanks to you guys, which is quite cool that this has been a complete word of mouth operation. So we've grown relatively fast with the community's help, which has been awesome. This volume has just died here right now.
Pretty much done. Now the offer is pulling on the 10, but
no one's taking it, right? Which is
who's gonna buy at the end of the day with the yields so strong? They are still pushing the highs. On the 30, they are about. They look like they're going to break the highs on the yields.
When was the last time they move like this in yields? This is a strong day, yeah.
It was just after the Trump the Trump win that we had solid dump on the treasuries.
As Cole saying you need a steep learning curve to trade off that dom. Yeah, I mean we've been doing this for a long time. I mean I've been trading for over 10 years. So you don't just learn to scan 6 markets, in a day. It takes a long time. But you've got all the correlations here in the world, pretty much. You've got the safe havens, you've got the whole curve here. And this action here is not really that common. Normally it's pretty much in a range and you're extending to value area high and value area low at this time. So this is what is good to see. We're now seeing the buyers fight in. So we're basically going between here and here. So we need to break, was this 22.5? I think it was, wasn't it? We need to break this 22.5 range to the upside. And the 10-year is going to control the curve here. It needs if it breaks here, then we should potentially see the rest of the market tick up. The 2 year is also now made this level, the POC, so we're not going to move too far from here most likely. Yeah.
It's also the dollar, the dollar against the euro. The euro USD pair is down minus 0.4%. I didn't check
Wow.
the dollar.
Yeah, dollar will be
Yeah,
strong.
it's
That's helping the bond sell off as well. Then.
mm, yeah, very, 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 very super strong dollar.
Yeah,
Super, super strong.
it makes sense. Despite that data coming out really strong today, and the Fed basically saying they're going to cut, the market is just not caring what the Fed is saying right now. Not at all.
No,
It's actually the opposite. They're basically saying you're not going to cut, or if you cut, you're not going to cut as much as what you're saying. Hence,
the December cut is almost priced in, but we are looking forward to the January one.
yes,
And
exactly.
with the tariffs and everything going on, and the inflation now supposed to raise again, well, the direction is clear for
Yeah,
now, for what the market is expecting forward.
exactly. I mean, the next data points that come out, if it shows more strength or there's no terrible revisions, um, then we're just going to continue down on bonds. To be honest, we need to see some really weak numbers come out. What data points are out tomorrow?
Probably some jobs.
Yeah,
Let's see.
always jobs on Thursdays. Is there any other data?
Number 12. The PPI,
It's not really a huge mover.
the Swiss interest rate, that could be in the morning, very early morning, your time, 8:30.
Right.
Then you have the Italian BTP yields, ECB interest rate tomorrow.
Oh, that'll be interesting. They're priced in the
Oh,
cut, aren't
can't
they?
wait to try that on the Bund. Let's see.
Randa, if I was to start trading bonds, what would my approach be? Um, what would I say? I would say to everyone to just not trade data driven days like today and tomorrow. Or if you're going to trade those days, trade after lunch. Because the action that you're seeing right now is a bit of an outlier. It doesn't normally sell off at this time or go bid at this time. But again, key level here is the 22s, or sorry, 22 and a half, or the 4,612 is lifted. But I would trade after lunch, and you're really looking to go for your 2 to 3 ticks or 1 tick, whatever the market is giving you. And you'll instantly turn and be somewhat consistent in your trading. You'll remove the boom and bust phases entirely in your trading. I am super confident of that. The reason being
Absolutely.
is that I can confidently say that is because after lunch on a non-data driven day, the market doesn't move that much. So, even if you've got some bad habits in your trading, you should normally be scratching trades. And I'll caveat that because it has to be non-data driven days, non-directional stuff. One of the biggest skill sets you're going to learn in trading is to realize when to sit in your hands and realize when the flows are not what you're expecting. Because typically, right now, if you didn't know much about economic data and you didn't follow what the Fed was saying versus what the market is doing, you would see that the Fed is saying, we're going to cut rates, so you would just be buying treasuries. You know what I mean? That's the typical response, but you need to think a layer deeper than that. The Fed historically always gets it wrong, and the market sometimes is not that close either, but they're normally more adapting than the Fed, believe it or not. The Fed is always behind the curve. Excuse the pun.
They are, they are.
Love
Absolutely.
data-driven days.
Data-driven days are the next step. I mean, I love data-driven days because I've been on the markets for quite a long time, and but I was trading the ES. But I know usually what could be the if the data comes in a way or another. It's not that I know, but especially on treasuries, if the direction is taken, it's gonna stick to that. Maybe today is an exception because um, actually the Bund, for example, today after the CPI, it was much more straightforward. After the release, it was just straight up, and then when we had the reversal from the top on ZB, well, actually Bund started going down first. It started to make a wider range, accumulate more volume that always anticipates a reversal on the Bund. On slower markets overall, there needs to be some volume to be exchanged at a top or at a bottom before a reversal occurs. Whereas on faster markets, it's gonna be just fast. And but yeah, I enjoy trading data-driven days. You can run stats on how the market reacted to certain beats or misses in the past. Check the news because one thing that I forgot about a technique that I was using quite a long time ago was before a news day. I was filtering for the past releases because news journals always get it right about what happened and why after the fact. So, if, for example, you have a news release by Reuters or Bloomberg or whatever, the New York Times, at the end of the day, they're gonna tell you, okay, today the CPI was flat and the market went down, and then there will be a lot of correlated news. So what I did in the was just, which is also I read it in the past by Jigsaw in their courses. I was just reading the previous releases, how they reacted, etc. And then on Excel, if you take for news, if you're really into news trading and you want to do it manually without spending a single penny on data and etc. On Excel, it's pretty easy to calculate standard deviations. You just take the past year releases, you plot the release datas, and then you just run formulas to plot what are the first standard deviations, the second, etc. And then you are ready for the release. Is it gonna be a strong beat or it's gonna be a strong miss? Sometimes it will be just flat like today. But yeah, at least you're prepared. I
Yeah.
do that on Excel. If you want to get something that tells you automatically, I recently discovered, thanks to Quant Scalper on our Discord, there is an app called bettertrader.co, and it has an AI that tells you the average and the standard deviations before the fact, and it's gonna spell the data and everything out loud, so you don't even have to read, and you just can react. So if it's a strong beat and you think that we are going long, you just wait and see the treasuries are straight buying. You go with the flow. That's it.
Yeah, exactly. And that's the one thing that is different between ES and treasuries. If you get something that's way out of a standard deviation, you go to these guys, you go to the 5 year and the 2 year, and you hit these. The biggest beat in the last number of months has been retail sales. It was like a 1% plus standard deviation to the upside for growth, and bonds absolutely melted. And the 2 and the 5 year reacts more to the data that's out today than the likes of the 10 or 30 year. So in data driven days, you get bigger ranges on the shorter end, to be honest. Now, interesting, we're back up at this level here. I've got this drawn out. This is the level where the 4.5k was lifted into the offer and absorbed. The last time we were up here, we were at 48 basis points on the yield. We really need to see this go to 48, 46 to try and break here. To be perfectly honest with you.
Yeah, Obsidian, absolutely. If you Python for with the Refinitiv API is great for doing that.
Wow, that's nice. Awesome that you can
Yeah,
do that, mate.
yeah, Refinitiv is so powerful, man. Really, really powerful.
And you wonder why, guys. Hopefully you enjoy this kind of variation on the stream. I don't normally stream this because, we've been in the 3 tick range for 45 minutes, and it's this constant battling. And like we said, we've got 30 minutes to the close in treasuries, and we'll probably see an uptick now. We really need to see yields tick down to 48, 46 in order to break this level. Again, the 2 year is not moved. We're now probing this sort of little mini high to then go and challenge up a couple of ticks. But you guys can see why we're saying these markets are very, very chilled. You don't have the stress that is in indices. I mean, like trading NQ in this market, it's not even remotely the same, right? And I would suggest anyone that is struggling with profitability at the moment and wondering why, I would say give yourself a week or so to at least stare at these markets on the DOMs.
It will show up if you are evolving as a trader, because the end goal is not to be excited about a day, but be so damn bored at the end of the year about having made money. You know? So
Oh, we have
yeah,
brokey
looks
brokey.
like
Come on.
10,000 delta at the low here on this yen. Nearly. That might hold.
I'm willing
Well,
it.
on our advantage is the fact that ES moved 4 points in the past 30
We're
minutes.
also seeing a bit of an uptick here in Swissy and the yen. You want to see that try and reclaim here. Oh god, I'm not.
Euro is the USD. The dollar is calming down against the euro. Kind of supports reclaim of,
I'll be
I don't
very,
know if
very surprised if we do not crack this. This is now the second attempt. We've got some interest here. It's clearly still an iceberg at this level. Again. Okay, someone grab their balls and lift this level, please. Come on. You've just thickened up. Don't you tick 10. You see,
let's see.
when this happens, you want to see them throw a little bit more than that, right? You want to see them lift in like 100 or so. It's always nice and juicy when they actually lift some size in, because then they're really testing. The offer is just
There you go.
absolutely disappeared. Yeah,
There you
completely
go.
cancelled.
Another 300 traded into 23 at the
Hmm.
end. Another 100.
Yeah, do you see like what was that? A couple of thousand cancelled there or something, right?
Backtick. Let's see how much trades on the 25s on the backtick. For now, only one contract. Two.
Yep, and notice that
Only
this
two.
is the yields have ticked down. We want to see this go to 40, 46s, 45s here. If we can tick down to 46, 45s, then we'll take out this level. There's a that's still 48s. Okay,
23 still offered.
You guys have been talking about this. Here are the guys. They've just shown up. They've just turned it on. See that? These guys. They turn this on. It used to always happen at 1 p.m., but they've now varied it. Plus or minus an hour and a half now. Well, plus an hour and a half. It's not like they're turning on a little bit here, are they? And now they're back ticking aggressively into this.
2,000 contracts traded into 25 now. Well, let's always remember that we are calling for a bottom on a heavily sell day.
Yes, exactly.
So, It's not that easy. So we were almost zero delta on the Z end here at the bottom. Now recovered to plus 10,000 after we traded 75,000 contracts here at the bottom, more, even more across these 4 or 5 ticks. And so yeah, we are calling for a bottom at the end of the session. So
Exactly.
bear that in mind. For example, on ZB at this time, I would scalp for ticks with some size, 2, 3 lots on the ZB, on the UB. On the UB, while I think that ZB is just back ticking up or down, I would wait for an advantageous position in the queue when it's pulling, getting against what is selling or buying now to get a fast fill in without too much size trading into me back to the mean. So if we are trading 2, 3 ticks now, 02, 03, 04, I will buy 02 back into 03. If, of course, I'm just shooting um, a random example. But yeah, I will just scalp for ticks at the end of the day because I know that it's probably not gonna do a much bigger move.
Exactly.
Probably I will be more aligned with what the delta is in the past 20 minutes, so I will prefer getting into longs back to the mean than sells because I don't want to go against an eventual reversal breakout to
Yes.
the upside.
Exactly. Exactly. I see it the exact same, mate. Typically, when it gets to this session, you want to really be fading back to the mean because it's really unlikely that you end in a spike of a day, especially in treasuries. It normally
Mm,
will literally finish here where it's at, or we're going to break to the upside and challenge, the S1 pivot here. But we'll see. There's been so much absorption at this price. It's crazy,
so much, yeah.
and yields are now
The
back up
trade
to
that
50.
the trade that I called on the UB would have played out like 02 to 03 was a nice feel because we had the bid was pulling the queue would have been like 70 or 80 placed in the queue and that would have given a fill at 02 and then 03 would have been an instant out because like 200 or 300 contracts traded. So easier money that you can get. Easier money.
Exactly,
Just
and
use
there's
held
a
it up.
there's a reason why
Yeah,
all of the prop firms banned this type of trading because it's the easiest way for retail to make money by country mile.
of course.
Um,
I always called for this, like calling for the next few ticks is is much easier than calling. I would say I would say on the extreme opposites, taking a tick on the treasuries against holding Bitcoin for a year. Okay, so let's say you bought Bitcoin in March, April. You would have sustained 3 or 4 months, even more of range without knowing the direction, and everything was any upside or downside was at a certain point was based on the outcome of a completely unpredictable event, that is the US elections, because Trump won and the Bitcoin gone up. If Trump didn't won, probably even either it would stay range or down, because equities and Bitcoin in the other scenario, we were prepared for that, for the other scenario where like we are talking about politics, but I want to make clear that we are not taking any side, just talking facts, you know. So imagine the amount of unpredictability something like holding for a long time has against taking a tick consistently, even one tick with 5 lots a day, that makes your day, you know. Do you agree, Lauren?
yes, exactly. I mean, you literally only need to take a. You've got a couple of ways to do it. You can go in with some size and treasuries and only take a couple of ticks, or you can just remove the risk and grind all day, and you're only trading one or two lots. Um, and you're only taking a tick at a time. It really depends what you're set up. If you're going to do that, you're better to be trading the long end, i.e., UB or the 30-year, because the tick to commission ratio is much better. You're getting 8 or 9. I think you can trade nine trades at scratch before you need to make a tick, which is crazy. You're not getting that in any other product at all. That's the type of spread you're wanting, you know. And also, this is not breaking this level until we get below 48s. So the fact we were up here and we were 50s, they're now just faffing around here. So this is where
Yeah.
the yields are extremely important, because we had to break 48s, so I had to go to 46 in order to sustain this here, which is not. So
Just a range. At this time, the bond market, the yields are pretty much done. They're pretty much done. It's very difficult that they move another 10 basis points either direction. More likely at this point, I think that they go in the current direction, so in the positive, another 5 basis points at max. Then it is to make a full size reversal, I think. Pretty much done. The Bund is dead. Just
dead,
dead
dead, yeah.
this time, yeah.
And there's my drive there saying, glad we streamed this. You'd love to be bored making money in the markets. Yeah, exactly. I mean, honestly, you're doing 4 or 5 hours or whatever in treasuries of a day, you will be absolutely stoked to be finished. It is slow. And more so for the fact as well, you can't, you're not going to lose a lot because it's been in a 4 tick range here. Do you know what I mean? If you're just, say you just, I know you picked the direction long here. I'm not saying you do this, but you just quote here, and quote here, and you're just taking a ticket each time with a LIFO approach to get out of the market. You're not going to lose your shirt. Put it that way, because it's only in a 4 tick range. Slower markets don't tend to move as much, and they're consistent like this. Even on this is like a really big day, and this has moved. I mean, what's the total amount of ticks this has moved today? Um, Let me just quickly have a look at that actually. Let me clear all this a second, and I'll just have a little look. So this is the tens. Let's go to the 5-year is, because that's the most volatile one, because it's the shorter end. If we take the 10-year, and this is like a pretty big move, the total amount of ticks from the actual high to the exact low is 37 ticks today. And then the 30-year, let's have a look at that. 30-year, 37 as well. Maybe 38. 5-year will be much more, because the 5-year reacts more always to the data. 5 years, 48 ticks, just to give you an idea. And this is a pretty big day. Just so you guys have got an idea.
Yes, he's now broken. Yes, just did the classic um after you have those one-way days, one way to the upside days, and every pullback has a huge negative delta that leads nowhere, and it leads just to a pullback. So like from the top about 50 minutes, it made a minus 3.5k delta to the downside, and then just stopped and back up. It is the worst trick that ES does, because I don't know why, for some reason, many people, when there is a huge upside move on the ES, they keep anticipating a neutral day. like shorting every little pullback, and then it just continues rallying 20, 30 points, no?
Yeah, exactly.
But then at a certain point, it makes a kind of reversal, a move to the downside, which is just long liquidations, like a long closing, of course, taking profit. It looks like it's gonna reverse to the downside. Then no, it just stops, and next sweep up, it leads to another 20 points up.
Yeah, is Aaron saying, did symbols roll over? Yes, mate, the roll finished about 2 weeks ago. So we're now into March. Or H.
Time for the European bonds a bit later, like a week later, but we are on the March contract already as well. And from this week to the next, we will have the equities rollover. So be careful, guys, because the flows can be very, very, very difficult to read. Can footprints be utilized on treasuries? If so, what time frame range, etc., is best to read? I can give you my take. For first, footprint can be utilized, and what you can use is some kind of organization that you need to set trend and reversal. You need some kind of chart like range charts or reversal charts that let you set reversal ticks and trend ticks. And I would suggest to set the reversal ticks to a higher value, like I don't know, 4 or 5 ticks on the ZB or the UB, and the trend to 1, 2, because that way treasuries are markets that, as we said before taking a reversal or continuation, they take time, accumulate a lot of volume. So you want a way that shows you that we are accumulating a lot of volume. That is not only volume per bar or high volume nodes, that helps. On the other side, on markets like treasuries or the FESX or the European bonds, I would suggest using a tick chart, a one tick chart, one tick, so that you clearly see two-way auction. You clearly see small ranges and stuff like that.
Yeah, I've personally, I mean, I've almost got a mini footprint in here, to be honest, and the inside prints. Me personally, I find footprints are hard in real time. They work really well when you're looking at the left of the chart, but not so much in the now, to be honest. So it depends what you want. I think it all depends what way the data resonates with you. So what you prefer. So some people prefer to look at heat maps and footprints, but realistically, all of that data is on the DOM anyway. It just depends how your brain interprets it, and then what you prefer to look at. Personally, I don't use footprints. I have used them in the past. I think they work better for ES than treasuries, and I've actually got a running delta counter here for the last hour. Anyway, you can see there's been tons of buying in the last hour, and we're not moving at all. So, but yeah, there's definitely less emotional entanglement in treasuries, and it all boils down to it just being much slower, relaxed, and you're not going for home run trades. You're just looking to take the next couple of ticks, and it's much easier to consistently do that than it is to predict the next 30, 40 points in NQ. And I think there's a number of studies that show that retail traders that trade treasuries have got a higher likelihood of being profitable than people that are trading NQ. Yet for some reason the majority of retail decide to trade NQ. I just don't understand. It's just such a market order driven market now, you know.
I mean, you can exploit that. I have multiple tactics to exploit that, but as I said earlier, you need to be fast, super concentrated, because the first loss you take and then you take the second, it's so easy to go tilt on that thing.
Yeah, exactly. It's
I never been so consistent on trading since I stopped trading yet, to be honest.
yeah, exactly.
Never been so consistent.
I've not traded it for a long time. It doesn't even come into my mind to even want to trade it anymore. Um, you know, the irony that the markets we're trading here is called fixed income, yet when you actually trade them, it basically fixes your income because you don't have, you know, the more hours I sit at the screen, the more money I make, typically. Um, Whereas if I was trading ES, I'd have to have certain parameters in place and loads of different things to stop me potatoing.
Satan, did you join our Discord already? I want your wisdom on our Discord daily, please. Retailers go to NQ for the same reason a moth goes to a flame. They want to burn. Wow.
Yeah, exactly. I mean, there is you would there's just so many. There's a lot more better markets. I mean, if you're fixed on trading indices, I would probably trade Euro stocks, or I would even look at trading corn. I was trading ags quite a bit in the last 3-4 months or so. Nice market. The only thing it's hard is the commissions are quite high in it. It's the only thing, which is why I always typically come back to the 30 year, just because it's such a great bang for your buck. I can't stress enough how much of an advantage to you as a trader only being able to make one tick in every 8 trades in order for you to be profitable. It's not such a killer on your bottom line, especially if you're taking some scratches, some losses, and so on. It doesn't hurt so much. Yeah, well, that's true, Miranda. But realistically, I'm not, and I don't think people should be here to. We're here to make money. Do you know what I mean? The thrills and stuff I would like to do is outside of trading, not while I'm looking to make money. You know, and it should be boring. I mean, I can't stress. Can you guys imagine at this exact screen right now if we were watching this for 5-6 hours a day? Can you imagine how boring that is? You've got news wires on, you've got news flows coming in, you're checking data, you know, interacting with people in Discord and stuff, breaks the monotony. It's a very lonely game. That was the reason for creating the channel in the first place, to try and break that up, because it makes it easier the day, to be honest with you. It's a long day, and see when the roll happens. My gosh, I'm there 12 hours a day because the market doesn't move. It's in a 20. As an example right now, there's been 1,412,976 contracts executed on the 10-year, right? Pretty directional day. Total delta for the session, wow, it's actually positive. Holy smokes. So there's been, just call it 1.5 million on the 10-year, right? On the roll, you're seeing 4 million contracts on a 20-tick range. So the market doesn't move. There's so much volume because contracts are transitioning from the current front month to the forward month. In this case, it was the December to the March contract. And the market no longer gives a shit about direction. Their main focus is then delivery. So it's much easier. Tommy, no. The trick is you just don't lose, mate.
No, there isn't a completely foolproof uh,
Wait, of course,
strategy.
of course.
Mm.
I mean, the thing is, if you're trading on non-data directional days, you can look to potentially fade in and do some kind of funky things, but you obviously are going to take some losing trades. It just all depends what you're looking to do. So the yields have never broke below 48s.
We are just stuck here.
Yeah, we're not going anywhere. Now we've got 5 minutes till close. We're just going to faff around here. Maybe even probe below a little. But yeah, I don't.
Lot of volume on the 30, positive, probably shorts closing,
Mm-hmm.
and passive seller absorbing all of that, holding into tomorrow because probably after a day like this, we will continue down overnight. I wanna try to short the open on a demo, like yesterday, like I showed you. To like the first super S1 on the pivots and see how that works out again.
Yeah.
Just for the sakes of trying.
Aaron, I would say that if you're trading on Sim, mate, on Sierra, the fills are absolutely shocking. It is one of the most passive sim fill engines you're gonna get, to be honest. Just something to take into consideration. But hey, it's better while you're learning, mate. But just be aware that when you are going to trade live at a point, the fills are
Mm-hmm.
better in live than in a passive sim environment because you only get the shit fills and you never get the good ones, pretty much.
Mm-hmm. Yeah, overall on the low market the fields are super good. I was impressed. I say everybody was saying, "Oh, they're worse." No, much better.
Yeah, exactly, Obsidian. We're not going to do too much here, but I mean, look at the amount of size that's here. We'll see if they do have a crack at this, or we just now basically finish, you know, in this kind of
If
range.
yields crack the highs here, I'm gonna really be impressed.
I know.
No, just ranging. It's not going anywhere.
So when we
Two
wrap
minutes,
it
2.5 minutes.
at this level here that we had drawn, I think it was here, right? We'll just draw it here. Wow,
There's even edge in a moment like this, in the last 5 minutes.
it's crazy. They're always at it, mate. The 10 year's not moved the yield. I've not actually watched these other yields. It's too hard to concentrate. It's just, as you guys can imagine. Can you imagine watching these four numbers, 2, 5, 10, 20, and 30 that corresponds, and watching the markets? It's very hard to do that and stream and answer questions and stuff. So we've mainly been focusing on the 10 year. But you miss tricks where sometimes you'll notice when you stare at this that just something gets out of whack for a little bit, and then you can take that for a couple of ticks. Maybe UB is normally the one that gets out of whack a little bit, or the 30 will lag a little bit from there. They're normally the ones that tend to either lag or lead. And the 5 year gives you your idea. 5 and 2 year for me gives you the idea if it's going to potentially continue to crack lows or not. Because when we were down here at the lows, if the 2 year was also melting the lows as well as the fives, then there's a higher probability that you could see some more downside. That's the way I look
Yeah,
at it anyway.
I bought double O's on the UB and trying to get out at O2s. It's if they can buy the offer, please. I couldn't resist. Oh, two contracts. Okay, a bit more, please.
Eh.
No, I'm gonna get out at O1s now.
Yeah, this is pretty much all she wrote. We're not going anywhere now. We're not going to break this here. This is just the close.
Out at 0-1s. A last tick in the last minutes.
Oh, and they got you out there as well. Nightmare.
I would have got the 0-2s, but it's fine. Fine,
C'est la
it's
vie.
fine.
Interesting to see if they do crack this here. Look at the 10k on the offer here.
5, 4, 3, 2, 1. Goodbye.
Yeah, it just stops dead. Wow.
Yeah, Obsidian, I like to trade. I love trading end of day close flows. They are easily exploited. I done that on ES consistently like a year. Last 15, 20, 30 minutes when it's very directional, you know. Just get those short covering or rallies or you know, by closing. It just takes a direction. You can run it 2-3 times.
Drive is asking if the correlations are really important. The answer is yes. Very important, mate. You can't trade the 10-year without knowing what other parts of the curve is doing. It's just not possible. They're so linked to each other, it's not even funny. It would be like driving with one eye shut and not having any mirrors. That's how I would compare it.
Would suggest using sounds for the other ones, like you know, you have your favorite. Maybe it's the 30 because of the bigger tick size, but then as a correlation, sometimes one will show its hand earlier, depending on what is driving the market today. So you will see maybe you got into a long on the 30, and you just want a couple ticks initially, but then you see that the 5 or the 2 are like steadily buying for 30 seconds straight. They eat up 1 or 2 ticks, and maybe you can consider holding the 30-year long for a bit longer in that case. Or on the contrary, maybe you are in a trade on the 30s or the 10s, and you see flow going against you on the shorter end on the curve. Maybe consider getting out before that flow comes into your market. So yeah, impossible to trade without correlations. Yeah, man, Obsidian, imagine. There is so much edge in the ticks. Let's see. Tomorrow is another day.
Yeah, exactly. And I think you can, with how much the orders are broken down on indices now and how thin the books are, you can move 50, 100 lots on these markets and really not be noticed, to be honest. You could easily trade 50 lots in these markets and not even be a dot on the map. I think, imagine if you threw 50 lots out in NQ, it would be like jumping in with sharks. You'd be absolutely picked apart. As soon as you market that, it would be a disaster. You're going to get terrible fills as well because there's nothing on the book.
Yeah, probably. To execute that size, you will need tools like TT and icebergs, machine guns. Some little bit more advanced stuff, which I would love to use. I swear, another 6 months, and I'm getting TT. I want my hands on the ADL and automate some stuff.
The spreader would be quite nice.
It comes with a huge cost, so to justify that before even trying TT, I mean, to justify an expense of $700 per month. I think that monthly stable I would need to do 10 times that amount to justify a tool. So still a long way, but
Exactly. Yeah, Obsidian, the order book is disgusting in NQ. There might as well not even be limits there, to be honest with you. Are we going to turn this level down here into POC? What's the current?
and imagine
We are.
Obsidian that
Wow.
just 3 or 4 years ago a yes was considered a slow market. Imagine now.
Yeah, exactly.
The slow market by definition, and the UB was trading 30 on the bid and the offer. Worse than the Buxer.
UB is now tradable from my perspective. It's the same kind of thickness as corn.
Yeah, it's great. It's great. It sweeps sometimes. When
Yeah.
you're wrong, you're gonna find out very soon if it sweeps against you.
Yeah.
Very, very soon.
Yeah, I prefer the 30 year, to be honest. It's, sometimes I'll trade the UB because if you're right quickly in that, you're out in and out in 10 seconds.
Mm.
Very,
The
very
sweet
quickly.
spot.
Yeah. You don't typically get that in the 30 year, but you do in the UB if you're correct. So if like you're in a 4 tick range and you've managed to determine the low and high of that range and where the value is, for that 10-15 minutes, you can, requote the same price 5-6 times.
And imagine Obsidian that probably options ruined that because all the money switched to that. I'll be right back, guys. I'll be right back. Well, actually, I'll be right back, but then not for long because I have to cook dinner. Otherwise, my girlfriend will be angry when she's back from work.
Yes, I think overall to really summarise the setup for this, I think if you are struggling, it's definitely worth to give treasuries a try. But it's going to be, it's going to be like learning again, to be honest, because the concepts are the same, but it's just not as aggressive. But you can understand now why, there was an uproar about banning them, because realistically, when the market is like this, you can just take 1 and 2 ticks for 30-40 minutes, to be honest. You could just comfortably quote here now, chances of us breaking the lows now is going to be pretty unlikely. So you can just start quoting here or potentially offering here, and riding it back. The POC is now completely changed down here. So when we get down here, there's nothing traded. They've just literally traded 100,000 contracts, and that's one price in the space of an hour, and that's one price, which is madness, to be honest. But yeah, what's the general consensus for you guys? Do you want to see more of these types of streams, or do you prefer the ES streams? What's your preference? Be good to get some feedback from the community because we're trying to do something a bit different. Mix up December is the plan. And we've never broke below. The yields are now ticking to 54s towards the highs here, so we could see them aggressively hit into the bid here. Yeah, no chance. To be honest, mate, I even find ES pretty quick these days. It's okay, but I just find it a bit too sweepy. Um, good, good, Miranda. That's what I like to hear. Good. Okay, nice. We can do this then, which is awesome. We'll probably do it, maybe an hour before close or something. Something along those lines. Yeah, I'm surprised we didn't actually get a reversal, but the yields were the key to telling you that. In order to break uh, in order to break 22 and a halves, we had to see a tick down to 46s on the yields. We didn't get it, so they're now probing the highs. Okay. God, I never realised you guys are so keen on the Treasury life. What have I been doing then? Obviously, trading Treasuries is my thing. So, but you guys can understand what I'm saying. I mean, can you imagine watching this exact setup you're seeing on the screen for like 5 or 6 hours for the day? You're going to be so drained after it. I can't wait to be done. There's no excitement in it at all. It's, thank goodness I'm finished. But it will literally change your trading. And I've traded a lot of different markets in my time. The only other one I can compare to it is corn. Corn's a very nice market. The reason why I don't trade it is because the scalability on it, the commissions are so bad, and you need to have the most expensive seat with the CBOT in order to trade it. Whereas you can get a pretty cheapy seat with the CBOT to trade financials and take your comms right down. So, and also, if you guys have not had a look at the live brokerage proposal we've been working on, that gives you the facility to trade treasuries with an extremely low margin, 8% margins. If you go into the Discord and check out the announcements tab, it's pinned, and you can essentially sign up to it. To give you an idea, to trade the 10-year, it's $176 off the top of my head for one contract, and it's less than $3 a round turn. $2.92 to be exact. And I think the 30-year was just short of $400, same as UB. And again, $2.92 a round turn. That's the starting gates, no commitments to round turns or anything. Much better than what you're going to get by going to the brokerage yourself, because obviously we've used the community's reach to get there. So if you're interested in that, join the Discord, have a look at it, and give the email address hello@mrorderflow.com. Give it an email and let us know that you've signed up. And just so you guys are aware what the plan of attack is for the next couple of quarters, I've got a lot of special things coming. We're currently working on a website at the minute, and we're planning on really being a lot more consistent in the schedule, and looking to bring some cool things to you guys. Trying to treat this, because I am, to be perfectly honest with you, sick to death of how a lot of these streamers and stuff on YouTube are just giving this business a bad name. I mean, I'm not naming any names, but a lot of them have got absolutely no idea what they're doing, and just punting affiliate links for people to trade NQ, and it just for someone that's been in this business for so long, it really gives guys that have been doing this for a long time, it puts us in a bad light. So I'm going to try and make sure that what we can do in this space is try and make people profitable, and try and leave a mark in this space, and create something special, to be honest. Something that this community can be remembered by, and it's a safe space for order flow traders and traders alike to try and push things forward, rather than the standard stuff that you see. So, loads of fun things coming, and I hope you guys are looking forward to it and are as excited as I am. The 10-year is half of the 30 years, so it's $15.62 a tick.
Alright, guys, I'm back, but just to tell you that I'm busy.
Offski. No problem, mate.
So
No problem. I'm gonna hang out a
have a
little
nice
bit more with the
uh,
team.
end of the day.
Yeah, we'll probably give it another 30 minutes or
Okay,
so
okay.
from my side. We'll see what happens if we can essentially try and break this level, or we're just going to faff around. But yeah, give me a message later, mate, and let me know how you're getting on.
Okay, okay. Bye, guys.
So, you'd love to learn more about the treasuries and the correlations. Um, Now we'll need to do some specific videos on that at some stage. You firmly believe that it can make a significant impact, especially since there are a few genuine traders out there. Does the Discord link work? Yeah, mate. It's in the description of this video. The description of this video if you copy it, or it's in the bio of the channel, mate. If you want to click on it. Cheers, Davey boy. Aaron, it's not normally as tight as that, mate. I would say, from 1 2 p.m. non-data driven days, you could be in a 7 8 tick range or something. Just depends. Nice. Well, make sure if you are going to do that, we've got two main avenues right now. I would actually prefer if everyone just traded smaller and went live, because actually it gets you what it's truly like. But if you're not wanting to do that and you've not got the confidence just yet, I would probably recommend you go to Blue Sky, to be honest. The reason being is they are by far the most trader friendly prop firm I've seen. I can't believe I've only just found out with them, considering I just devalue Top Step. You guys know my stance on that. They're basically they're a joke these days. But anyway, not going to make it about them. Blue Sky allows you to basically trade how you like. The valuation and phases are a little bit harder to pass. However, you go live instantaneously with them, and you can calendar spreads. You can trade one tick. You can do whatever you want. Oh, look at that! We just broke this level. Can we actually get to this S1 pivot level? And we are now at 48, so we need to see this. Ooh, interesting. Let's see if we've got a little uptick to close. Well, it's close, but for the ES close, or indices close, we need to see this go to 46s is what we're saying. If this ticks back to 50s, then we'll probably reclaim here. So we need to see the uptick. I've not been paying attention, but I would be really noting each level for the yield to see if this makes sense for this level been up here, but I've not. It's really hard to concentrate on the three while reading chat and stuff. Yeah, this is definitely the thing. I would say, Max, that you need to you definitely need to have a lot more knowledge about the how the market works in general. So stronger dollar means putting pressure on the bonds, as well as what the Fed stance is, what data points are the Fed watching, what regime are we currently in. You know, generally where's the money flowing in terms of bets, and is the market carrying with that in terms of what the next hike or cuts is going to be for the Fed. So you need to have a much better understanding of the market in order to trade. So yeah, because see this setup where people just say I don't have a clue about the news and I don't need to know. You need to know that for treasuries, 100%. And make you a much more skilled and knowledgeable trader. But Max, I would definitely say though that if you spend 6 months trading treasuries, you're going to be a much better trader than you are trading NQ. Put it that way. And the chances of you losing money is dramatically, well, not dramatically reduced. The chances, you basically, if you're going to lose anyway, right? But you're going to lose in treasuries much slower. So it gives you more time to learn, and you don't need to lose so much money. You know, it's absolutely ridiculous that you see some people use these apex evaluations and stuff, and they've gone through like 1,000 evals. It's an absolute scandal. I mean, when do you wake up and realise that maybe you're doing something wrong after 1,000 evaluations? It's absolutely crazy. You might as well just get your money and put it on roulette at that point. JJ, how's it going? Yeah, really thickened up. Since the algo showed up, we've just really done its thing. So as we were saying, this yield is still not ticked down to 46. We need that to pop a roo here, or otherwise we're heading back to here. We may, with a stroke of luck, try and get to this level, but the bid is just now pulling, so nice little iceberg here. They've done this the continual time. The market's not been able to break this level. Mr. Yoda. Yeah, it was three. It was. I think it was 300-400 earlier on in the session, mate. Let's see if we can reclaim this. See how we've just we ticked up to 50 basis points, now down to 48, and now we have thickened up. So again, 46 needs to happen in order for this to break up. I'm hoping we can actually get the example so you can see it. And you want to start seeing it flirt with it. Okay, so they have just pulled the offer. You want to see this stay strong here on the ultras as well. Fives is already that little bit stronger. You want to see this continue to thicken up here. Again, this is weak on the twos, which is nice. You want to see it clear here and thicken up. But watch for this level. There's the 46. So you want to see this clear now. It's at 46s. First time we've seen a tick down to 46s. So we want to see this clear the offer here. And a pop above. I'm effectively just willing it here. Come on. No one's taking it. Straight back to 48. There we go. Nice. There's the puppy there. First time we tick down to 46s, we actually break this level. Notice how powerful these yields are. Thing of beauty. Seriously. Absolute game changer when you're noting where the high and low in yields are, considering for trading, and it just so happens that the offer pulls when this goes to 46. You know, there's a reason why these offers are pulling, right? Because they are literally also quoting on the yields at the same time to spread. Sonic. Yeah, exactly. I mean, the hardest part, honestly, guys, is to put the content together for it. You know, I, as you can tell, can hardly even can tell how to turn a damn mic up. Never mind, edit videos and stuff. You know, so just give me the charts and we discuss order flow and you know, and I can help you learn. That's the plan. But in terms of cutting the videos and doing anything, I don't really even, you know, the only way that's going to happen is if I pay someone to do that. You know, in terms of getting an editor and stuff in for the channel, which I'll probably do at some point. But ideally, I would like it so that um, the actual YouTube channel itself, because I mean it makes so little money. Um, I'd like it if it was self-sufficient to get an editor so that um, we could potentially produce the content and stuff that way. You know, because that's the hard part. You can imagine trading after a whole day. The last thing I want to do is go and cut and edit a video. You know, we're going to do more shorts and stuff to try and get some more followers and things for the channel. But realistically, my idea is I need to rely on you guys, the community, to help the channel grow. Because if it wasn't for you guys, the channel would not be growing. Because I'm not really doing any marketing whatsoever. It's basically just word of mouth and you guys essentially recommending it to other people, to other traders and stuff. So I really appreciate that when you do. So, and it's kind of I really wanted to have a community approach because, in general, the more the community grows, the better quality videos I can put out, the more I can outsource for the things that I'm bad at, which is normally things that are tech related to some degree. And then of course the more people that sign up to the facilities that we use, specifically the live brokerage thing, then it allows us to reduce the overall commissions for everyone. So it's kind of like if everyone plays a role, everyone benefits, to be perfectly honest with you. And also it's quite refreshing, right? To have something that's more of a community in this space rather than, rather than not. Yeah, exactly, JJ. I mean, we need to the yield has to try and stabilize 46 and touch 44s. This was 35 because I checked it. Again, this needs to tick up to 33s. This was 75s because we clocked it earlier. This is 68, so no. So we need to see all these tick up in order for us to try and have a little pop. But mostly the 10 euro control. So if this needs to break below 46s. We have had the 46 tap above, and we did clear 23s for a moment, but now we've went offered and hitting into the bid. Exactly, Sonic. I mean, that's the thing, mate. It's doing it and editing it and stuff. And to be perfectly honest with you, I've got no idea what to do with editing. I can literally, cut a video and add a video in. That's literally it. So the rally in the bonds initially, I need to have a look at the full data set. But sometimes as the moves come out, you basically have initially traders increased bets that the Fed is going to cut more because it's now about an 85% chance they're going to cut in this meeting in December, right? So they increased the bets towards that because the data's in flow. But in general, it was then effectively short-lived because the overall market sentiment still is that even though if the Fed does cut into January, February, March, and so on, if this data does continue extremely strong, which promotes growth and inflation, bonds and treasuries hate inflation. You know, bonds and treasuries actually want recession. To be honest, recession creates low yields, and a rallying bond market typically. This is why you need to um, you need to be aware if the data comes out, and if it's something that comes out as flat as expected, you're not playing that data play. It needs to come out where it's extremely, say for example, I think it was 2.7% CPI number, right? If that came out at 3%, you're instantly going to the 5-year and just press the sell button. Because there is no danger if that comes out at 3%, the market is going to rally. It's not going to happen. It's going to melt. But it comes out as expected, and the fact that everything came out as expected, right? The big funds know that, which is why the last couple of days the market has sold off. And you may be thinking, well, how did they know that? They've got some of the top analysts, and now with the likes of AI, that are giving them a probability of what the numbers are going to be, depending on data, depending on what the last number of years is like. You know, they'll be able to have that in a really finite margin for what those numbers are actually going to be, probably within at least a standard deviation. So if they know the number is within a standard deviation ahead of time, they can then start to basically predict where the market should be. Is it currently out of sync or not? And that's the edge that retail does not have. They've got guys that are working 50 hours a week, right? Multiple people, to try and give them an edge on what the number is going to be for the next CPI print. Do you know what I mean? You can always understand how much of an edge that's going to be. When you've got all the data and all the resources in the world, of course you can predict that within a relative confidence interval. So that's typically the reason why. The market just doesn't wake up on a Monday, Tuesday and just decide to dump because it feels like it. Market's clearly pricing in a relatively hot PCI number, and the fact that the market is basically saying to the Fed that we think you're actually behind and you shouldn't be cutting right now, especially with the likes of Trump coming in, and the general Trump play is still effect that he's just going to cause higher inflation and more growth until actually things come into play where we need to see how the market reacts to tariffs and so on. But the general rhetoric is, higher dollar, more growth, more inflation, and down on bonds. So we've been streaming now for about 2 hours roughly, and this has been in 1, 2, 3, 4, 5, 6. Call it maybe from here, 8 tick range in 2 hours. No wonder they do not want you to trade these markets. I can tell you that. Again, we're at 46s. Let's see if we can hold here and break below. This was 35s. We've ticked down to 33s. This has not moved. And this is down to 71s. Excellent. That was 73s before. So we are basically selling yields and buying bonds at the minute. And the ultimate target is going to be here for the 10-year, this level. See if we can get there. There we go. 44 has been a gradual uptick, which is nice. See how slow this is in treasuries though? We were saying that, but you're never expecting this to take like 2 hours for for the pull into this level. Jeez. Aaron, I've got no idea what I just spoke about, mate. If I'm honest with you, someone will need to clip it or something. It's much easier to just get OrderFlow and people to ask questions, quick fire questions, and I can just answer them rather than to prepare content. To be honest, I prefer to do things in live than prepare it, because when you know a lot about something, it's just easier to ask questions than it is to have to prepare. I don't need to edit and clip things to create a narrative or whatever. I think that's the problem with YouTube. All these fancy edited videos are, people can basically create any narrative they want, But yeah. Okay, so we have ticked into the 44s. Not too much is happening. It's kind of a bit slow though. Staying at 33s. We want to see if this can get down to 30 basis points. Not been paying attention to the twos though. So yeah, let me know if you guys have got any other questions. And if you let me know actually who here is actually traded treasuries or currently trading them. And let me know if you're not as well, so I can get an idea of a number of you people that right now are green to treasuries or are actively trading them, just so I can get an idea. Because treasuries are not spoken of, and honestly, the stuff that's on YouTube about it is relatively outdated, to be perfectly honest. I also need to remember what I did with that mic there, in case that happens again. Mr. Yoda with the ZB and UB, excellent stuff. Yeah, me too. They're my main markets, and then I'll tend to sling some size in the tens or the ultra 10-year. If I'm ever in a tight spot, I'll maybe leg into the 5 or the 2s, or if I'm deciding to play a data driven day. But to be honest with you, see, over the last couple of months, I've just been trading full days. Then you managed to get 5 tickaroos. Excellent stuff. On the Ultra. Exactly. It gives a much bigger range. So near 1.5 years in treasuries, John Grady graduate for the 10-year in ZB, and after today you're considering moving to UB for a bit. Well, yeah, I mean, I don't actively trade the 2-year because the 2 and 5-year the commissions are not very good, but they do move more if you're looking to have some news plays. So there is that, and they are for hedging purposes, right? But you need to the shorter part of the curve gives you an idea that this wasn't going to break the lows. Like we've been saying the whole stream, the 2-year wasn't moving, whereas if the 2-year was at the lows, then we would be more concerned that this was going to break. Because the days we just see, continual breaking of the highs and continual breaking of the lows, the whole market is doing the same in treasuries because they're so correlated with each other. I mean, they're like 99% correlated, and then we add in the yields, they're 100% inverse to the respective part of the curve. So instead we're now back up to 50 basis points and we have ticked down. Yet when we're up here, let me get this. Where did we get to? I think when we were up here, we were at 46. So we've just basically went bid 4 basis points. Now back down. So looking likely we're just going to finish here. Sadly, we never got to S1 target. Excellent. Dan, hope you're well, dude. Yeah, you could do it. UB definitely moves more than the 30-year. And as I was saying earlier, UB, when you are right on it, it's, and you're going for one tick or whatever, you're in and out in 10 seconds. But again, you need to be using the correlations. Yeah, exactly, Miranda. I think that it will definitely get you more consistent. That's the whole thing. You're certainly not going to lose as much. That's the main thing. And you remove the boom and bust cycles if that's something you struggle with in your trading. There's Jagger jumping in. Yeah, I never understand what the appeal is to trading really volatile markets. I just don't get it. I don't know. Maybe it's an age thing or something. I don't know. Like, see if you have a normal 9 to 5 job, right? You don't get excited at it, right? You literally cannot wait to be done. Why should trading be any different? Yeah, there's definitely something to exploit, mate, but I would say that this is an outlier day. This is a big moving day, and it is a data-driven day. And I did say yesterday that if we do get a relatively decent hot number for CPI, that bonds would melt. And the fact that we come in with those numbers showing that there's still a bit of growth in the economy, and the print, it's not like it come in. It's not like it came in a huge miss at 2.5% or something. It was still relatively showing strength. So just to be slightly careful on that front. That UB, if you're wrong, it's the risky. Of all of the markets you could trade, UB is by far the riskiest if you're starting out, I would say. So we'll definitely continue with some Treasury streams. It's pretty good that you guys are enjoying this, to be honest. And you don't mind the fact that we're in a tighter range. Do you not? You guys are not bored about that? That's the reason why I've never really streamed this, because there's not really any action, to be honest. Yeah, well, exactly, Sonic. Use that part for your Dawn Wars and everything you desire. Quite a lot of buying it's going to the 5-year in the last hour. Nearly 4K. See what the rest are doing. Flat, flat, and pretty flat. Okay, can we break 46s on the yields to help tick this up? Or not? Don't think so, but we'll see. Get a little bit of action in the next 10 minutes, but nothing major. How did you guys all make out today? What did you trade today? Did you have a good session for CPI? And did you guys typically trade directly after CPI or not? Okay, 46 again. Let's see if we can break it. There we go. If we're not going to tick to 44s here, we're going to reclaim and then go offered again. Especially this not ticking to 33s. This is down to 69s, no new beat. Around 4 p.m. UK, nice. Yeah, that's normally the time that I start trading on data-driven days. It's normally after 4. And I like to get 3-4 hours in if possible. Bad day, didn't stick to my plan, tried GB, missed every great move, down 3 ticks in a day. I mean, it could be worse. The good thing is, mate, that you can call a bad day down 3 ticks, which is awesome. Pretty sure if people say a bad day on NQ, they lost the house. And that's the power of treasuries, mate. And hopefully now that you've got the treasuries more arranged from, short to long, you can actually get to see the correlations in play. I have them in the order of the lengths 2, 5, 2, 5, 10, ultra 10, 30, ultra bond. I mainly do because my eyes instantly go to this screen, and this screen is the two main focus. And then my peripheral catches these two, and then I can glance down at the counterparts down here. Nice, four ticks is good. That's what I like to hear, Dan. Traded ES, 5 points. Nice. I didn't trade a huge amount today. I think I made 11 ticks today, but I've been going gung-ho the last two to three sessions. I think I've made 40 plus ticks in last yesterday and the day before. Yeah, Monday, Tuesday, and Friday was a good session as well. I was off for majority last week too. So it was good. So I tend to find if you're putting in like 6 hours a day in treasuries, you can imagine it's pretty taxing. I get quite tired. I didn't mean to clear that there. Yeah, it definitely could be worse, mate. You could be down a lot more than that. Nice one, Dan. 4 ticks is great. Great stuff. Especially if you're only trading for like an hour or so. I think what bothers me is most of the year was potential for 20 to 30 tick day. They'll never get those. Well, it depends though, mate. I mean, are you going for bigger moves or are you just looking to take 1 or 2 ticks? It really depends, because it's much easier to take multiple trades and have 1 to 2 ticks at a time than it is to catch a move of 10 ticks, to be honest with you. Considering if you've got the ability to trade when the ranges are tight, the market's in an 8 tick range, for example, so you can trade around the edges of that range, multiple times and take probably the range in the space of a couple hours. Wow, that's a lot, buddy boy. Hopefully the MRI went okay, Mr. Yoda. But yeah, loads of clicks. 4 trades today, 26 yesterday, and 56 the trades on Monday. Yeah, I think at the moment it depends. I'm probably on busy days. I'm somewhere at the 20 to 30 mark. On quiet days, maybe 5 or 8 trades or something for me. But I'm saying that's that's across a whole sesh. Brian, you traded the Bund. Or what are you asking about the Bund? Yeah, I've always the Bund is actually, believe it or not, moves too much for me for my liking. To be honest, it's a bit much for me. I prefer the bobble if I was to trade Eurex personally. And also, it means I would have to be up at like 6:30 to trade. That's a completely change in schedule for me, to be honest. I need about 3-4 coffees in me before I trade the markets. Excellent, Dan. I'm glad you've had a good experience with them, mate. That's awesome stuff. Yeah, I need to actually do a survey and get some feedback on how they're doing and things, to be honest. So it's good to hear that it's a quick approval and you guys are all happy with it, which is ideal. I'm still super pleased with how the commissions and margins turned out for that, to be honest, especially a really good reputable broker, which is awesome stuff. So what's interesting is you'll see in the next 4 minutes what the close is like in ES, right, or indices close, right, and watch what happens in treasuries. Normally people that are not too experienced in ES and stuff will trade, last 50 minutes of the day when the algos kick in, and it'll be crazy. This will hardly move typically, but we'll see. We're now back to 50 basis points. The low was 46s on yields, so straight back into the POC. Just actually looking, how's the quality of the stream, by the way? Can you see everything really clearly? It's not like blurry or anything like that, is it? That's all you can see, everything's crystal clear, right? Interesting to see what that would look like on the TV. Okay, 1 minute until the close comes in. Let's see if Treasuries moves a tick. I'll be excited to see. And then we have the safe havens on the left, the yen at the top, and the Swissy, which are approximately, just in case I've not covered that, are 92 to 96% correlated to the Treasury market. So they move in tandem. They go up, so do Treasuries, so it can give you, again, another little idea as to where the money is flowing into in the market. So right now ES will be going bananas. Will be thousands of contracts currently working up in the next 2 minutes, and this is what happens in Treasuries. in case you guys have never watched it, but you have now. $52 basis points. What a move today in Treasuries, actually. It's a big day. Super clear. Awesome. Awesome stuff. Good to see that OBS and YouTube is behaving. Also, I don't think I've covered this, but the yellow writing is the current price, in case you guys are wondering. So here is the current price. I've removed the price because, to be honest with you, I don't really care about what price the market is. I only care about what's happening at the prints and what range we're in and what the correlations are doing. I could not really care what price the bond is actually at. It really doesn't matter. But in order to reference things, I want to know where is the current price so I can make a note of it in my diary if I see an iceberg or something. Yes, I'm that old fashioned these days where I will literally write in my pad 22 ice buy. So that's one of the things. So this is literally all I have off my screen. I'll check market profile with a coffee in the morning and maybe check it a couple of days to see if where we are in respect to last week's range or anything along those lines. But typically, this is what's been looked at for hours every day. So yeah, let me know if you guys have got any other questions. If not, we'll look to potentially wrap it. And hopefully you guys have enjoyed this variation on the stream. And we'll continue to do it. We'll be back on Friday evening. I can't imagine Friday evening is going to be that exciting. But we will still be back. No problem, Mr. Yoda. James boy, nice of you to pop by, dude. Hopefully you had a good session, mate. And thank you for the turnout for everyone this evening. As I said, we're going to continue on the consistencies train here of Monday, Wednesday, and Friday, so you can put that up on the wall. Make a note on your calendar that we will be streaming at those times. PM session, we'll try and do from 1 PM is a little more action in bonds, but to be honest with you, I might still be trading at that time myself, and it is almost near impossible to do this and trade at the same time, mainly because I've realised that I can't watch all the yields, and it's too much. So at most what we'll do is we'll be on from 2 PM, so between 1 and 2 PM, 2 PM latest, typically. So we can catch the last couple of hours we'll catch the last hour of bonds, and then we can continue on and see what's happening. Okay guys, you all take care, have a great evening, don't do anything I wouldn't do, and hopefully tomorrow you guys stay green. Peace everyone.